Hey everyone, Chris and Jason here with the Private Lenders Podcast. Today we are going to be answering some questions that have been asked in our mastermind group. That's hardmoneymastermind.com. Go anytime, create a free account, join the conversation, use the training materials, let us know what you think. All right, cool. You want to jump into the first question? We'll start talking about
it. Sure, yeah, absolutely. So question floating around this week was, I've had borrowers ask if they can e-sign closing docs. What are your thoughts on accepting e-signatures? And I guess there's a few different ways to think about this or also kind of clarify this question. There's a few different documents that need to be signed. So when we have our internal documents that we want our borrowers to sign, meaning like our lending intent and our borrower authorization, absolutely, they can do it electronic signature. That's not a problem whatsoever. Related to closing documents, honestly, that's more title company, right? The title company is insuring our mortgage. They're ensuring that it's the original signatures on all of our on all of the docs. I know that a lot of jurisdictions now do digital recordings, online recordings. So it depends on what jurisdiction you're in. Some of the states and counties we're in do it. Some of the states and counties don't. I would guess that the title company would require a physical signature. Obviously, it's still got to be notarized. When COVID hit, it was interesting because a few title, some of these title companies tried to make everything digital, which they should be digital, right? Doesn't, real estate has always been behind the eight ball with that. And I know they did like online notaries where, and you did one of those before, where you kind of get on a Zoom and you're signing something in front of somebody watching you sign it, and they did it that way. But as far as I know, most title companies are still going to require the borrower to sign it physically in front of a notary.
as far as what we've seen, but I totally agree that it needs to move in that direction more quickly. And like Jason was saying before, if you can record copies and you don't need originals, like for a mortgage or a deed of trust, for example, it's going to move pretty quickly in that direction. There's a lot of other industries e-signing other stuff, even other parts of the real estate process, sales contracts and everything else. They've been docu-signing stuff for years. We would love to have that be the case, right? That would make, if you can get the right kind of insurance, get it on record, and everything's in terms of collecting on our note remains the same, we should do it. We should do it.
Yeah.
That being said, it's not that common today.
Yeah, it's not that common. I don't know of any place that that has done it. I mean, they want to ensure authenticity. And I know e-signatures can do that technically, but they want it to be that person with, show their driver's license and understand it. And one thing to note related to that question is it's important to make sure the borrowers know that every single member of the entity, every single member involved in the transaction has to be there at closing to sign documents, guarantee the loan, things like that. That's a very common thing where you have a multi-member entity and only the managing member might show up. And it's like, no, all the members are guaranteeing the loan. Even if they're not guaranteeing the loan, there's still some sort of corporate resolution to ensure that all the members are aware of this transaction that have to be signed. So that's important. We've had deals all the time where it's like, oh, I'm not going to be in the state or I'm out of the country. And it makes it challenging, but you got to set that expectation ahead of time to make sure all members are there to sign.
Yeah, totally. Good question though. And hopefully our industry will be there soon.
Okay, next question. What's the best way to accept online payments for borrowers? You want to answer that one real quick?
Yeah, I'll jump in on this. All right, so accepting online payments could mean a couple different things, and it is tricky for mortgage lenders because in order to accept online payments like through a credit card or something like that, you would need to have a merchant account, and merchant accounts currently are not accepting mortgage lenders. I don't think they ever have. So that's the same reason why you can't pay your own mortgage on a credit card. It's because lenders don't have. So if you think about like the way somebody would normally think about making an online payment, it requires a merchant account. Lenders aren't allowed to have merchant accounts. So that way in which people think about normally making the online payment, the answer is no. There are other things that could happen. Like number one in our industry, ACH, like an auto debit is very popular. And we try to get those signed with every closing doc, where we'll have them fill out an ACH form, maybe even attach a void check. They don't have to, but like we do ask for it. And then we set them up with a recurring auto debit from our loan servicing system. Once or twice a month, we export all the payments in a spreadsheet that's owed. It's uploaded to the bank, and it pulls the next day from everyone's bank account. That's the most common option in the lending world currently. There are other ways that you can do it that kind of turn into a pain. Like you could take a PayPal payment, for example, which we have done, and then you transfer it from your PayPal to your servicing account and get charged fees, and it's annoying. I don't recommend that too much.
You don't want to do any of that stuff, and I'll tell you why. Anything that you do through PayPal or like Stripe, it'll go through typically. But number one, as you scale and get bigger, those companies are going to shut you down because they're not into mortgage processing. Mm-hmm. But most importantly, keep in mind what happens if you make a payment on PayPal. Let's say like a month from now. Let's say you bought something on PayPal, and a month from now you decide, you know what, I want to charge this back. I don't want this anymore.
Oh yeah, you can dispute.
Well, guess what? You dispute that charge, and you as the lender are going to be absolutely screwed because they're going to put a hold on it. They're going to investigate it, and even if you're right or maybe not right, whatever, there's a chance that might get clawed back. And who knows? Maybe the loan's already paid off by then. So don't mess with it. Do it this way. I will tell you, you do need to get merchant services through your bank account that you do business banking with. Most banks have it because you got to get approved to do ACHs. Not just pulling ACHs, but also paying your investors through automatic transfers. This podcast isn't about that. We talked about that in another one, but that's the only way to go. And you do it through your bank, and it's just like sending a wire kind of through your bank. You either do a one-off where you go in and you put the information in to pull or push the funds, or you export what they call is like a nacho file, and you do it in bulk based on your servicing software. So, recommend doing that. Talk to your bank, whoever you do business banking with. Again, depending on the size of your portfolio or your business or your average daily balances in the bank will could limit, how many you can do, but it's worth doing. It's definitely 100% worth doing. It makes it so much easier. Okay, next question. Just curious how you guys handle your capital investors rehab funds. So I guess what they mean by that is, let's say you do a loan for $150,000, 100 towards the purchase, 50 towards the renovations, and you have $50,000 of rehab funds. Where does that money go? Who controls them? How do they get dispersed? Things like that.
Yeah. So a couple answers to that. One, a savvy capital investor, especially when they're new with you, there's a good chance they'll ask for that if they know what's going on. So they'll say, hey, I'm going to fund the acquisition money now, and I'm going to hold on to that $50,000 for escrow until they start doing the work. And so as a lending company, you don't want that. You shouldn't set that as expectations if somebody pushes for that and you need the capital. And this even happened to us a couple times, not many, at the beginning, where somebody would say, all right, I'm going to hold on to this $50,000. And after they're, halfway through the job, I'll give it to you, disperse it to them, right? You don't want that ideally, because that's going to turn into a re-underwriting conversation anytime you need to get construction funds from an investor. They're going to re-underwrite the deal, see what's going on with the current condition. And that it's just not scalable. It's just not an efficient way to run your business. That being said, it could happen at the beginning. I totally understand why someone would ask for that, but you're going to want a way to, ideally you wouldn't do that at all. But if it ever happens, you're going to want to move away from that pretty quickly and just have a frank conversation with your capital investor and be like, look, it just slows us down. Like, we need to get these, we have a process where we do inspections and draw money within a certain amount of time. Getting those funds quickly for a borrower is super important, right? There's a couple like cardinal rules in private lending if you're doing construction loans. One is never miss a closing date. And two, get them draws quickly, right? So if you're being slowed down by that capital investor, you just need to have that real conversation. Be like, this is not an efficient way for us to operate. To be as effective as we need to be for our clients so that they'll come back, we need to have those funds in escrow, do a quick inspection, wire it to them within a couple days. Yeah.
Yep. It's a good way. It's a good way to do it. You can either set up a separate bank account, inside your business to keep those funds. And obviously, you're probably just if you're just starting out, you're probably going to have everything kind of written down in an Excel spreadsheet. But as you grow and scale and you get servicing software, it's equipped to handle all that. So you know exactly what funds are geared towards what. And, absolutely control that. You want to control everything. That's your job. You're the you're the originator. You're technically the lender. You're the servicer. You're everything kind of runs through you. So it's important to grasp that. Cool. Anything else on any of these other topics?
No, I think that's good. Those are good questions. Definitely keep them coming in the mastermind group. If you have an account, great. Throw out whatever it is you're working on. Not only us, but other people will chime in too. We can address it on a future podcast. And if you don't yet have a free account, check out hardmoneymastermind.com. Join the conversation there, and we will talk to you.